Well, people, we only have one trading day left in the year before we go into 2023. Today was an up day. We saw a bounce. Woohoo! It actually wiped out all, at least in the SPY, all of yesterday's big little sell-off right there, keeping the overall SPY in a trading range. You can see here, Tesla was up 8% on the day. Apple was up 2.83. Google was up. Meta up. Microsoft up. Everything was up. Oh my God, it was so amazing. We have a lot to talk about on today's stock market brief, mainly levels to watch going into tomorrow's trading day. And then we'll have a weekly recap on Friday and or Saturday. If you're new here, welcome to the channel. We use technical analysis and intermarket analysis. Make sure to hit that thumbs up. That's what that is. We're going to get into today's show. My voice is a little gone, so pardon me. We're taking a look at the 11 sectors that make up the S&P 500. Everything was in the green, and defensive names were towards the bottom. However, they were in green. So this was a risk-on type rally. Everything was up. Now, in yesterday's video, we talked about these zones, and we talked about the dollar, right? If it was going to break down from that midpoint, and it did do that. So the dollar went down, and let me show you what happened to all the ranges here. They were all green, which means they were at the bottom of the range, and boom, just like that. That's how fast this works. Pretty crazy. Oh man, my voice is gone. Shocked. XBI is the only one here in red, so that's going to be one to watch. We saw a pretty big bounce into the biotech names. If we take a look at the percentage highest gainers in the Dow Jones, guess what? These were the biggest losers yesterday, and now they jumped up. What do you know? And then we have a biggest loser. We only had two losers, WBA and MRK, as far as losing equities in the Dow Jones, and they were hardly down, minimally changed. So let's take a look at a couple of these stocks and see if, hey, if we have nothing to worry about, if we're just getting overexcited about a small little jump. Take a look at Apple first. Apple needs to overcome that critical level and gain it back of 130. So it got there earlier intraday, but you can see it kind of came off a little bit. Now, the prior day had more volume. That was a distribution type day. So like I said on yesterday's video, every bounce should be held with a little bit of skepticism. But like we said, it's not going to be a straight shot down. There will be bumps and turns and bounces and all sorts of wild shenanigans. Now, if you take a look at Apple on the 15-minute time frame, this is where you can get a little bit more granular. We saw that move down to the downside. There's a positive divergence that started with a gap up, and we came into where the 5-period moving average, right? So this is still declining, and you can see here price kind of sold off into it. So what you want to see is we have let me do this again. We have 1, 2, 3, 4, 5. So this data is going to get lost tomorrow, which means we're going to have just this data going into tomorrow for the 5-day moving average. So it might come down still a little bit. It's not until we lose this data right over here where as long as the price action is going up, this will start to turn up. So as it stands right now, we need to recoup that, and the 5-day moving average needs to start turning back up to feel more confident that we can see some more price action to the upside. So yeah, hold with skepticism still. We have a declining 5-day moving average there on Apple. If we take a look at Disney was up and it recouped its gains from yesterday, but we're still below that 90 level. Now, on a good note is if you take a look and you actually zoom out further, you might look at this as a falling wedge pattern with a positive divergence that's currently forming. And that's always a possibility, but we really need to recoup that 90 region, and we would need to get above this trend line right over here. But be mindful that we still also have a declining 200-day moving average. So all bounces should be held with skepticism. Microsoft looks decent here, reclaiming that 50-day, but it's still below the 20 and below a declining 200-day. Price was wedging. And you can see we broke out today. Same thing with Meta. Meta's price was contracting. We talked about that one, but I didn't show the chart. Don't have it with me today either, and we started to see a little bit of a pop-up. So we'll see if we can get some continuation. That would help the S&P 500. But overall, remember, this is holiday trade, so not that much volume overall. Take a look at XLF. XLF had a little bit of a bounce, which we also talked about. This is going to be one to continue to watch. Where can it potentially go to? Well, hey, it's right there on the cusp of this prior support. Then it broke. Now we're flagging. So perhaps we get some sort of fake out. Maybe even goes up a little bit higher. We're not too sure because why? Well, it's been working off those overextended levels on those BP charts. So this is one that I'm watching for a short potential trade going into the new year. S&P 500, we look at the weekly risk ranges. 3,900 is still the upper, and we have just below, around 3,780 at the lower, which we did tag. And, we recouped, like I said, all of the trading days. So what does that look like from a weekly perspective? Well, it's pretty much unchanged, right? We're up very slightly on the week. We're right in the middle of the expected move because we haven't gone anywhere. So there's been a lot of volatility, but we haven't gone anywhere. So what would you like to see from a bullish perspective? Well, you want to get above this week. You want to give above this week and or, right, crack below it, and then we might see some more further price action. There is a 200 weekly moving average still inclining, but that would be it, right? 3,900 would be a key level to get a hold of, but be mindful that we still are an overall downtrend where we have a series of lower highs and lower lows, which we point out on this chart quite frequently. If we take a look at the 15-minute time frame, price is above the 5-day moving average, so that is a positive sign. Now, we've seen moves like this before where we get a gap up, rallies up, and it camps out for the rest of the day. We had a gap up, it rallied up, and then it camped out for the rest of the day. Do you remember this day? There's something very interesting that happened this day that's very similar to this day. If you don't remember it, that's okay. The positive divergence did play out to the upside, and we had this negative divergence forming, and we saw a little bit of sell side, but really just a bullish consolidation still above the 5-day. Now, what's interesting here too is we have 1, 2, 3, 4, 5. So we're going to be losing this data tomorrow, which means this could start to turn up a little bit here as long as the price action still remains up there. Now, if we take a look at the anchored VWAPs, this right here, this orange one is the month-to-date anchored VWAP. So price is still well below the month-to-date anchored VWAP, which is not a good sign. We are above the weekly, which is a good sign, right? We gapped right here, and then we got right back above it, and that held for pretty much the day. If I anchored actually a VWAP to the day, it actually was like this, and we hardly even tested it, and price action stayed above it. Now, why I pointed this bullish consolidation out here and bullish consolidation here, you got to see this, the Fed anchored VWAP. So if you anchor a VWAP to any big macro data drop or when the Fed talks, a lot of volume is traded in those specific time frames. So you can see how price action acted when it got here. It gapped down and fell off. Now, I don't know if that's going to be the same case going into tomorrow, but just be aware that, hey, you would like to see it get above this, and that could send us up, obviously, to potentially 390, which is the upper weekly expected move. That would be a good shot, right? That would be actually, once again, a bull flag, be probably around a full measured move. We're above the volume profile here, which is measured on the month-to-date short. So if we do get above right here, this volume shelf, which I'm sure you can see right here, boom. If we get above that, there's pretty much just an empty kind of gap through this area right here. So 390 would be the target for me if we get some more bullish type of price action. But don't be surprised if we come right back down to this volume shelf, because these can act like magnets too. So what you want to see, once again, price to break above it, you want it to hold, boom, that would be awesome. And then you could scale up. But if price does not get above it and we start heading down, be aware, you might want to let the volatility in the very early trading session kind of calm down. We do have this gap over here, right? Potentially get filled. So perhaps we get a gap up, it fills this gap, and then you're like, oh no, it didn't hold. Okay, so just be aware that that can happen, especially in the early hours of trading. The Qs broke through that rising wedge structure. We have a declining 5-period moving average still. We had a subtle negative divergence, right there. And it's this is one that I hold with skepticism too. Still declining. I would like to see it pull back. I'd like to see this start to turn back around like so, but we're just not quite there yet. So we'll continue on. IWM, also a big mover today. This was up 2.53%, flagging, and then we started breaking out. We have a gap just above us, and this one's doing a little bit better for the week. So we'll continue to watch that. I like how the 5-day moving average, it's neutral. So that's the first step before it starts turning up, is price is above it. But it's not really the area that I just want to kind of enter in blindly. I would like to see it pull back and do something like that, right? If you look just to the left of the screen, we've seen large moves like this, large moves like this, large moves like this, large moves like this, and they got faded. So to see a large move, you don't want to just FOMO into it. You want to see proper setups take place. One big one to watch, to continue to watch the dollar. Like I said, the dollar was down. It's still in this coiling pattern. When the dollar went down 0.5% today, a little bit more, we saw a move up in the equity markets. That's typical. The TNX came down a little bit. This could have helped tech slightly. I am surprised that financials haven't really moved all too much on this move. So if TNX, the 10-year yield comes down, that might actually hurt financials. So I'll continue to watch that. We saw a little bit of a bump in the TLT right there, and we still have massively inverted yield curves still in the 10 and 3 and the 10 and 2. Another thing that I'm watching is copper. So copper, interestingly enough, is putting in a positive divergence. I like to look at these where copper makes a higher low. This is kind of interesting, right? It's Dr. Copper, where SPY puts in a lower low, and then we've been calling this one out, and like it went up, and then we talked about it where, hey, copper put in a lower high, SPY put in a higher high right here, boom, boom, and we're like, okay, careful here, it might sell off, right? Boom, to the downside. Now we're actually kind of wedging right here. Now, and we're also wedging right here on copper. So if copper, you can see here, copper actually has a high to a higher high, where SPY has a low to a lower low. So that could be a positive divergence. But what I'd like to see is copper to start breaking above that 3.9. And if that is the case, this could send the S&P 500 potentially back up into I mean, probably just in the middle to upper portion of this overall trading range that we're just really in. So that could be around 4,000. If we do get to 4,000, where would that take us? It'd take us to fill this gap slightly above us, right? So if we start breaking out of this and it does see some price action up to the 200-day moving average, there is a subtle gap right here around that 39.50 to 4,000. So that would be the level to watch for potential short fade potentially, or take some profits if you are long. Now, other than that, I want to go into silver. Silver is wedging right here. Silver is in some bullish context as it's back above the 50, declining 200-day though. There is a negative divergence that's forming. So just be aware here that this trade could be dying off. We might need to see some sort of a pullback, some consolidation or something like that. If it keeps on, pressing higher, it's always a possibility, but I just don't like seeing those negative divergences, and also the PPO start to curl over. And you can see the same thing here with gold. You have a big distribution day, right here, and then right here, and then right here, and price is kind of just drooling higher, and then you have a negative divergence while price is putting in higher highs. Could be very well wedging right here, and that means that we could potentially take a hit at some point here, more of a consolidation at some point. So not the greatest area. Another way you can look at this is potentially just looking at 1825. Boom. Hey, yeah, it could be just a consolidation, and we might break above that, which is a possibility. Looking at that 1825, if you want to take a jab at it, I prefer to see a pullback or come to the lower zone. If we take a look at the zones once again today, if we take a look at GLD, it's in the middle of the range, slightly above it. If we take a look at GC, I think that I have this on here. Yeah, GC right here. It's in the middle of the range right now too. So if it comes down to the lower range, I'd be a little bit more interested in it, but it's just not quite there at this particular point in time. Okay, a couple indicators I want to go over. BPNDX charts working off those oversold conditions, right? We're at 30.91, so it's back above that. So that's a positive sign, right? When it gets overextended or to the downside, oversold, we wait and we let our foot off the gas on the short side and potentially see if there's a bounce to come. Well, the bounce came today, and it was like, hey, you had to either be prepared for it, or if you weren't, you just kept on ripping throughout the day. Same thing goes with the BPSPX, getting out of that oversold condition. Remember, if this comes up a little bit more, this comes up, this can go back down, then you might have what's called a positive divergence, which could set up a potential another good opportunity to rally. If we take a look at the BPCO-MPQ, this moved into oversold territory, and now it's moving back out. Still not too far off. So if we get a big down day, it's going to bring us right back into that area. BPNYA, this is also moving itself right out, but kind of just still in there. It's at 29.99 on the RSI. So watch out for this one. If this wants to potentially move higher, comes out of that, you could see a bounce in the New York Stock Exchange, which is a broad market. And if you look at this, it could very well be potentially flagging right here. So always be open for the possibility or bullish possibility of that. Remember, things get wonky going into the new year, and then we have earnings, and it could throw us for a big loop. So I wouldn't be all too aggressive at this particular point in time unless you have some very seriously controlled risk. If we take a look at the NYSE summation index, still pointing down at this particular point in time, below that zero marker. Remember, we talked about, hey, if it crosses below zero, we've seen sometimes bounces. Well, guess what? It crossed through zero, and we're starting to see a subtle bounce there. We pointed that out on a prior video. NASDAQ summation index, it's still well below zero. This started to curl up a little bit. So if we do get some more price action to the upside, this might start heading up, which could create some sort of a bullish potential for a trend. We do have that positive divergence that is trying to play itself out to the upside, as we saw that bounce today. So it's still overall bearish trend in, on the shorter time frames, and even on the longer time frames. The bounces are bringing in some hope, some FOMO. But overall, be prepared. As long as we're above a 5-day moving average, that is a positive sign. The moment we get back below it, you want to see this start to curl over. And then the last thing that I want to just close out with, this will be one thing that I'm watching tomorrow. If we can get above this, that anchored VWAP, and start closing in on that 390, potentially even up to that VWAP. That would be a big day. Not to say, me personally, I might not be trading all too much tomorrow coming into the end of the year, the last trading day, just because that it could be, it could be lower volume. You can see more chop, might not do much. But, I'll keep an eye out in the markets and see how it goes. That's all I got for you on today's episode, everybody. Hope it helped out. See you later.